Welcome to Momentum Monday. Today is April 28, 2024. Howard, do you own any Facebook?
I don't, but I own Google, as you know, and that was
Good job.
yeah, you know that. And then I think I shared on Stockbooks about Snapchat on Facebook number. It's a rare trade that worked, but Google's the one, right? But you take us through the market here, and we'll walk through Google.
Okay, so I mean, the week before we had a pretty significant sell-off, right? I mean, look at those huge red bars, red volume bars. Obviously, a lot of distribution. And last week we had an oversold bounce, and now we're back near potential resistance here for all the major indices. I mean, the QQQ here near 430, 435 potential area of resistance right near the declining 20, the flattening 50-day, and the Russell 2000 looking similar near 199, 200 potential resistance. So the big question is are they going to be able to make another higher low and then just continue higher above the 50-day, or they're just going to spend more time digesting and just trading in a range for the next few weeks? I think both scenarios depend on how the market will react to earnings. We're still at the early stages of earnings season. It started last week, and we saw that companies that are priced for perfection, any little hiccup leads to a significant and quick market feedback. In this case, Meta, I mean, they gapped up several earnings quarters in a row, and going into those last earnings report, everyone was super bullish. I mean, StockTwits posted that the sentiment on Meta is extremely bullish. Everyone believes that it can only go higher, and guess what? The second day said something that was not to the market's liking. They gave soft guidance. I mean, their expenses seem to be continuing to increase, and the stock dropped 20%. I mean, this is a pretty significant drop, overnight drop for a stock of this size. So the market is unforgiving. If this thing can happen to Facebook, to Meta, it can happen to any other stock. You should not be disillusioned and thinking that you have some edge holding over earnings if you're a swing trader. Obviously, if you're a long-term investor, maybe your reasons to hold are different. And then, but what mattered here is that despite that huge gap down in Meta, the market on that day here, Thursday, actually made a higher low. So that's bullish, right? It didn't make new lows. Actually, the buyer stepped in, even in Meta, buyer stepped in, and they bought this gap down. Now the big question is this level here, 450, 455, that used to be a support, is it going to turn into resistance as the stock tried to bounce? I mean, obviously this matters for short-term traders, not for long-term market holders. Google was on the other side of the market sentiment. I mean, last quarter, they missed earnings, they gapped down, went sideways, but still managed to recover to new all-time highs ahead of earnings. But their report was so strong that it was enough to gap up. But guess what? It gapped up, and it didn't really follow through on that day, as a lot of institutions use those big gaps on earnings in mega caps as a liquidity event. They just sell a little bit, and something that they will probably buy back on a pullback to the 50 to the 200-day moving average. Let me show you a really long-term chart of Google since their IPO back in 2004. The stock is up 70x since then. And as you can see, some of the best opportunities to buy is on a 30% pullback, near its rising 20 months moving average. This is one of the approaches if you have a longer term approach, and the other is to buy breakouts out of huge bases like we had here in 2012 and like we potentially have here right now. So these were
it's the best looking thing out of nowhere. Magnificent Seven crossing 2 billion. obviously NVIDIA, I think NVIDIA is the purest tech company. So if you really want to own tech, it's not really Apple or media consumer company. It's definitely not Facebook. They're a media. And they may say they're a tech company and they spend like a tech company, but they're a media company. It's Google and NVIDIA, right? And NVIDIA is truly the tech company. But probably still at some level cyclical just because this price, I just get worried about a rug pull there. But Google to me is the board. It's my ETF, as I've always said for decades. If you're going to own one tech stock, it's going to be, you know, I still think it's a QQQ. But for me, if you really wanted to get specific, it's Google, right? And Google showed YouTube, what, 32 billion now annualized at least, and growing in YouTube. The cloud business still incredible, trading at 20 times earnings, and probably sentiment's terrible. But I think they had kind of the Coinbase moment that they, in terms of culture, they fired the 28 crazy people that stormed, took over the office. They said, you know, Columbia may be nuts, college campuses may be nuts, Google, you know, Google may be nuts in terms of how woke they let it become, but they sent a message. You're going to fuck around on campus. You're going to find out why. And, you know,
Do you own any NVIDIA, Howard?
I own the QQQs, right? I don't own semiconductors, which has been obviously my biggest miss.
Yeah,
Because
I mean, obviously NVIDIA, the big winner, right? I mean, both. I mean,
only the QQQ, you own plenty in NVIDIA, right? Probably 5 to 7%.
Yeah, it's a significant allocation. Yeah.
Yeah, so I just don't understand valuations, and I've been telling people for years I've tried not to pick stocks, and the QQQs outperform most, and the SMA has outperformed the QQQ, so shame on me.
Yeah.
But I think, like I said, I think I've had this thesis the last couple months about the 3Gs, Google, Gold, and Goldman Sachs, and I think they're all just crush it, right? And I don't know what it truly means, Goldman Sachs. I definitely have a thesis that I've been, this company has been in the wilderness. Go back to the monthly, right? They spent a decade, you see, from 2007 to 2022, when it finally broke out, just trying to be things that they weren't. Well, what's the market cap of Goldman? It's only 140 billion, right? But the last 3 years, I've really, I don't know much about investment banking, capital markets, I got to be honest, but I think we're in for a capital markets boom. Because fintech, the winners in fintech are Stripe, Square, PayPal, Robinhood, Coinbase, but they don't have incredible margins, right? They have incredible businesses. Goldman Sachs has incredible margin, incredible business, and for a decade, they've been spending their time and money on fintech, right? And I think if we look at the daily now on Goldman, the final give up is last week they sold off their Marcus to Betterment. They sold off the last bastion of their fintech. Maybe they own Plaid. But I think we look at their chart from like when they invested in Plaid and started Marcus to when they finally divested. You'll see that like there's nothing left. Goldman's just in the pillaging business again, right? And I talked about it in my Trends with Friends show with Lewis. Goldman is going to be, there's nobody to compete with Goldman. Like Robinhood, great, they win the degenerate. Schwab, Morgan Stanley, and they battle for the wealth. And then you've got Interactive Brokers, which continues to go higher, which just owns the software trading institutional market, right? And use investment in SMA market. But the granddaddy is Goldman Sachs, right? So you got to do business in China, you got to do business in Indonesia, you got to do business in Africa, you got to do business in Latin. Goldman's been inserting their people around the world for the last 10 years as usual, Argentina now in Africa. And they're back to the fat margin business, which eventually people are going to need commodities. We're in a commodity bull cycle, and all the mistakes that countries are making buying and selling commodities, which are hard. You know, S&P just represents 3% commodity exposure. For everybody else is going to have to get commodity exposure in the next 10 years, they're gonna have to go through companies like Goldman Sachs, and Goldman Sachs ain't charging 10 basis points, they're charging 3% probably to get these transactions done, right? So I look at the chart. I mean, look
Yeah,
at this chart.
look at the volume. I mean, look, it's
Yeah.
big volume
Look at
on
this.
the
Continue
updates.
to add.
So accumulation, yeah.
Don't chase it, but I think dips can be bought here. Listen, inflation and rising interest rates, I think, help a Goldman Sachs, which is leaned up, which is global, which is in demand, because they're not focused on chasing tech. And then you look at Google, which is truly a tech company, and probably has the best data of any company in the world, and is probably going to win AI because we use Maps, we use Gmail, we use YouTube, we use Android, and like Apple, which doesn't have as great a lead in AI as Alphabet does. I think Alphabet.
What do you think about Apple here since they report earnings this coming week?
Obviously, I
Sentiment seems to
own
be bearish, yeah.
Because everybody owns it. They own the S&P or the QQQ. I think everybody knows that the car was ripped out. Everybody knows they gave up on the car. So where does the growth come from? I don't know.
Can they surprise to the upside since everyone has low expectations?
I don't think they can, right? I went and bought the new 15 through Verizon, and I'm paying $8 a month. I don't know this. I don't know how it all works anymore. I don't know how Apple's definitely getting paid by everybody, but I don't think they can surprise. But I also don't think they can surprise that badly to the downside, right? So I think, like I said, the 3Gs represent a portfolio better than the Qs right now, right? You got the best of tech, you got the best of commodities, you got the best of.
Is there a level where you would buy it?
No, because I buy it on all-time highs, right? Like I just don't see why I gotta, if it crashed in the 100 or something and the market crashed, obviously with it, I'd probably leave with Apple just because what is the numbers gonna be? $7. So at $140, 20 times earnings, with all that cash, but like I don't need to buy it at 170, because I don't see the upside, like they're not growing. And 9% to pay 30 times earnings. Law of large numbers.
So if you
I think Qs underperform,
yeah,
relative to other things, but it's not really.
So if you had the chance to create your own QQQ, right? Would you just give Google 20% weighting and then Apple, let's say 2% weighting? How would you?
Yeah, I mean Google. I think Google in the video rank top, right? But again, I can't recommend semiconductors because I just don't know the market. And then, like I said, gold and Goldman, right? Gold, is a representation of the commodity boom, and Goldman is a representation of global capital markets. So I think you can own some formula of Qs, SPYs, and SMHs, and if you want to cherry pick a few stocks, especially on dips, I think gold, Goldman, and Google win. But I think traders are in charge. Tons of opportunities. You see it, right, on the short and long side. Yeah. So it's not my thing, right? So I think it's a great market for stock picking. I think it's a great. I don't think money's coming. I just think we're in an okay market, right? But let's really talk about mortgage rates are at 7%, and that's real, right? And it doesn't look like there's any reason for them to come down, other than it being an election year. So I just think we're in a quagmire where the rich, and then there's all this talk about taxes, and I don't know. I mean, I don't know how I feel about things. I don't have any edge here other than.
Okay, so let me ask you this: have you made any private investments in AI companies, and what is their biggest expense?
I think everybody's biggest expense is compute, right? Paying NVIDIA. And
so this is still the shortcut way to play the AI trend.
In the public markets, it looks like SMH may be the poor man's, cowardly way to play it, which is a semiconductor index. I think I think
Because
the
there
word
is an
used,
interesting company that reported earnings last week.
yeah, yeah, yeah,
I
yeah,
mean, VRT, I mean, also up as much as Nvidia since early 2023. And they just
yeah,
provide, cooling technology for the data centers. So there are a lot of lesser known names that
yeah, and that's
they're
been
not
showing up
Nvidia
on all kinds of our trending no friends list for a while, right? Doesn't have any
that
followers.
have
Yeah,
done, they've done amazing, obviously SMCI, and now we're talking about, building the AI infrastructures and needing memory, and a company like Micron, obviously it's a much slower mover since it's a bigger company, but also acting relatively constructively. So I'm just
yeah, right.
wondering, obviously everyone knows about NVIDIA. I mean, NVIDIA CEO is invited, I think, tonight to speak on 60 Minutes. So it's not a secret. Like everyone knows about it. So what's the next? How else can you play the AI trend?
I said the only one that makes sense to me has been Google because everybody doesn't talk about it as an AI candidate, right? Because they're going to do it themselves, right? They have the compute, they have the Android to deliver, they have the apps, they have YouTube, they have the engineers, they have the, and no one's talking about it. Look at that. Like, how do you, forgetting interest rates, forgetting Iran, forgetting Russia, because you have to, because you wouldn't, if you looked at this chart and said, how's the world doing? Right? It's a pretty damn good. If you pulled up Google, Gold, and Goldman Sachs and you said, how's the world doing? You
I mean,
would
I
say
don't know
pretty good.
if gold is doing well, that's probably not good news, right?
I did say how's, you're right. So gold is a sign of the political and monetary policy of the world. So good point. Good point. But I'm saying with Goldman and Google, you would not get, you wouldn't think those would be doing great in an environment where so that's what I'm saying. I don't want to overthink the macro because it's very hard to figure out the macro, right? Because you're right, gold, what is that saying at a time when Goldman's breaking out and Google's breaking out, right? And Nvidia is 5% from all-time high. But remember, Nvidia is swinging $100 billion, $200 billion a day. Like, that's just bananas. And that's hard for me to comprehend versus 20 years ago when a big company was 700 billion 20 years ago, right? There wasn't $1 trillion company now, there's like 10 of them.
Yeah.
So again, like I just think everybody's trying to complicate things with the macro. And if you look at Goldman and Google, you would say, hey,
Do you
world ain't so bad.
do you have any interest in buying anything China right now, Chinese related stocks, since sentiment is obviously super bearish for a good reason, since China has been underperforming for a very long time, but then in the past few weeks we've been seeing some positive developments, and there's some interesting trends starting to emerge there. Like, do you have any interest, or you just there are enough opportunities in the US so you don't care?
No, I mean, these are some good charts you're calling, especially FUQ. And where's Tiger at, TIGR? And so again, like CWeb is interesting just because that's what the whole web index. And that's an interesting breakout.
Yeah,
Is that
CWeb is the
leverage?
leverage ETF, KWeb is the non-leverage.
Where's the KWeb?
FXY. Okay.
Oh,
Here's
okay.
KWeb. Would you put any money, like, would you put
Yeah.
like 1% of your money?
Absolutely. And so here's the positive. I do not show it. If people think they know what's going on in China, they're absolutely insane. If someone told you a macro picture included China in it, I wouldn't trust them. Because how do you trust China? But if I was going to trust one thought, is that the country's so fucked up demographically, leadership-wise, financially, and trust-wise. But they're buying gold. So say they're right about buying gold right here, right? Eventually, they sell that gold at a huge profit. And guess who's been buying all the internet companies that have crashed the last 10 years? Chinese government. So, if you think of China as you think of Goldman Sachs, right? An evil, despicable enterprise that's only looking after itself. That's CCP and that's Goldman Sachs. What a great time to buy China, right? Like, they're hoarding gold. They're going to eventually sell it back to people. They're they could do anything they want economically. And if
They're
you're going
probably
to buy
gonna.
China, and if you're going to buy China, you're going to buy digital companies, right? And so KWeb, I would definitely. I mean, it's none of my. I mean, just because of the way it looks
I mean,
here.
technologically, like in some industries, China seems to be, you know, really ahead. Like the other day, someone tweeted about some of those toilets where you can, you know, for $3 you can pee in a special smart toilet, and then a few minutes later it can text you the results on your health. You know, you're laughing, but that's genius. Like I would pay
Yeah.
for that.
Yeah, I'm not saying I wouldn't. I'm just saying I don't trust anything. You can't trust a company in China, right? They've never been honest, from Luckin to Alibaba to. Anyways,
Okay.
I'm just saying KWeb. If I was going to do anything, and looking at Baba, you know, not Baba, but I look at KWeb, and I'm like, if you want to own the internet in China, that does not look horrible, right there.
Yeah.
In fact, well, where's KWeb on the weekly?
Well, it doesn't look pretty on the weekly since it's been in such a huge downtrend for such a long time. But you know, it's starting to, you know, to show up a little bit.
You wanted to do a stop below like 22. I don't want to get technical, but that does not look horrible. But you know, and also.
Okay, Howard, do you have anything else you want to cover?
You know, you asked about private companies and AI, so I'll just say that we've made a bet on FinChat. We think much like Web 2, right, which went to the leaders, you know, Amazon created Fang. Web 2 created Fang, a world of Fang. You've got Uber and Airbnb, but pretty much you've got Fang, right? I think Airbnb looks interesting, actually. Someone shared the chart on
Yeah,
Slack.
Airbnb is setting up, but earnings are in 10 days and they're very unpredictable.
I don't like the company. I don't like using the product, but I mean, the chart looks good. But in a world where the Web 2 companies, you know, Fang became Web 2, Web 3, innocent till proven guilty, they're going to rule AI. So in a world where they rule AI, you got to go to the verticals, right? So sports and finance are the things that interest me. So and I don't think they're big enough verticals for the big guys to care about, like always, right? Like fintech, you know, the sporting gambling companies. So I think, you know, for us, when we think of AI, we think of sports and finance, the general economy, investing economy, wealth economy. So we continue to make bets around AI in software and sports and finance. Because again, the giants are there, but they're not focused there because they're focused on global domination. So when I think of AI, I just think of the domain experience that interests me, which are sports and finance, and they're massive verticals, you know, because they're very much focused on real time. There's gambling, there's market making, there's capital markets, there's investing and wealth tech. I don't think like the DraftKings overall. I think these trends are mostly over. Personally, I think that because they have no margin, right? Everything they make goes to customer acquisition and customer retention. So I don't love those companies based on the fact that they're expensive and they haven't proven that they can make money. Like if you look at, you know, this is the first year where they got, so I would say guilty until proven innocent. If they can put a couple profitable years together, I think people will be happy. But until they prove that they can make a profit, in a world where everything has been a tailwind for gambling the last 3 or 4 years post-COVID, they should be making money. So I think they could surprise. You know, I don't like that MGM, which is the best of the breed, it really hasn't made a move. So then, I don't know, sports and finance for us. Okay, I'll let everybody go.
All right, Howard, thank you.
Thanks for the questions, buddy.
See you next week.
See you next week, everybody.